to the channel. As always, if you are copy trading, you are an absolute moron and you deserve to lose all your money. And with that out of the way, we're going to be looking today at a theme that is very much an expression of how I see the macro playing out in the United States and a very current topic, which is, of course, the AI increasing demand. For the last few weeks, we have seen an ongoing debate about whether the ongoing capex requirements you see about all the hyperscalers and many companies spending a huge amounts of money in order to develop their AI build out. The market has been wondering whether the capex will be justified by the ROI that organizations, companies will translate that capex into. So it's a bit of an ongoing debate as to whether efficiency and the cost of generating these goods and services is going to be justified thanks to the introduction of AI into these workflows. Now, from my side as a trader, I do not have a view on this, at least on the near term. And neither I want to play or bet into taking a direction on this. So I think the better question to ask is, or at least the better thing to decide on when deploying money is the question of where are going to be the winners that are going to be benefiting from a much more probable theme, and that is the AI power boom. So this made me look at a company called Babcock and Wilcox. So I've prepared here a chart that depicts very well the sector dynamics of where this company is fitting in. So we have, of course, the AI and data centers driving all those AI workloads, right? You have your NVIDIAs, the Vertiv, all these kind of companies that are consuming AI. And then all that AI process is channeled through a series of processes from power generation, grid equipment, transmission, utilities, all the way to the end consumer. And where we stand at the moment is that, of course, the AI energy demand is exploding. We have seen how it's going to double by next year, resulting also in an additional 60 gigabytes gap or increase between 2027 and 2030. So this is expected to be just under 20% of US electricity consumption by 2030. It could be less, but regardless of the scenario, the numbers are just huge. And more importantly, when we look at Babcock and Wilcox, the AI growth, when it comes specifically into the energy aspect of it, is concentrated in specific regions, creating local grid and generation constraints. This is why it's important to plug those gaps as quickly as possible. Now, why there is a gap? Well, with the surging AI and data center loads arriving now, it is important to be able to deliver that electricity as soon as possible. But generation construction lead times take between 3 and 7 years, sometimes more, for many projects. And that is something that, of course, is creating serious constraints when it comes to this type of operations. There are also interconnection and permitting backlogs, and retirements of older plants keep happening. So the transmission build-out cannot keep up with the current standards that we are seeing. And again, of course, the demand will continue increasing as the time goes by. So as you see here, in terms of the projected AI-driven demand between now and 2030, we have this incremental demand creating a significant supply. And what's needed to plug that is more dispatchable generation, right? Keep existing plants running for longer, faster construction of new capacity, reliable supply of AI, and shorter lead time solutions. So this is where the company BW, that's the ticker for Babcock and Wilcox, fits. So first of all, they are in the middle of a turnaround. We'll see that in the chart and numbers in a second. But they are actually a bit more of an old economy sort of player that are now incorporating into the AI power boom trade, if you will, or theme. So they produce boilers and steam generation equipment for coal, gas, biomass, and waste to energy. They are in line with the environmental solutions, but they also do plant upgrades, life extensions, services, parts, and support. And they also have nuclear expertise. All those close that gap by enabling much more reliable and dispatchable power faster. So, in summary, AI is creating an urgent need for more electricity, and this company is a key enabler. They provide the equipment, the technologies, and services that deliver that faster. So that creates, of course, the macro tailwind for the company. But of course, that is not enough to generate a trade. We have to have a look at what has happened with the company over time. And as you can see, there's a company that has been around for about 10 years. They fell from grace quite a bit and never really recovered up until recently. So that's really where the story of this trade starts. It starts at the beginning of this year, where they announce some contracts with some hyperscalers. And the company, as you can see, has been on a rise ever since, reaching the most recent high of just below 22, which is a significant milestone. You can see that there's a bit of a resistance over here, but it keeps prodding along nicely on a upward trend. So again, we're not taking a view as to whether AI capex is justified or not. That is a fragile and crowded debate that will eventually be resolved. But that's not the trade that we are looking to do. Instead, we are confident that the energy generation will keep happening, will keep taking place, and this company is going to be on the right side of it. So why now? So when we look at the recent earnings of the company, we start seeing, at least on the sell side, a nice divergence in terms of expectations as opposed to realized results, especially on the last 4 quarters. And you see, for example, how some of the surprises were pretty big on the sell side as well as the EPS side. So they keep beating and doing quite well. But also, part of that achievement was due to the improvement of the balance sheet. So in terms of sales, they are expected to have their best year on record since 2021, but also they cleaned up significantly their solvency risk. So they decreased the debt, and they also improved their gross margins. They improved the EBITDA and also have made massive improvements to their EPS. So with that, we can see that, for example, cash flows, which used to be negative on the operation side, are now starting to become positive and growing very fast. Same thing for free cash flow. Also, with not such great increase in capex. So all those are very positive things. Then there are also the matter about their concerning operations, right? So they have an ongoing backlog that underwrites the forward strip. So the backlog is currently up just under 500% to 2.7 billion, with bookings up 1900%. Pipeline is currently sitting above 14 billion. So the revenue substantially signed and converts via POC accounting through 2028. So all those things have resulted into the analyst community significantly increasing their price target for the company. At the moment, the stock is trading just over $17, and the analyst median, the average is 24.67, with a high price target of 26. At the same time, when we look at the options chain over here, we can see that, for example, if we look at uh, August and beyond, the volatility of the options exceeds 100%. So the market is telling us that there is very high volatility expectations on this stock. And the reason, one of the main reasons for that is because one, of course, we have earnings coming on the 10th of August that will signal that crystallization of profitability. But also management has spoken before about a new hyperscaler contract award likely in that same window. So the company trades at 80 times next 12-month earnings. This is one of the reasons. So the market believes that this catalyst will be the first of many more. So with that, I think that there is a good probability that the stock will continue going higher, potentially all the way to 25 and even 30 if there are additional news that could uh, drive that investor enthusiasm. So the way I would likely play this would be by buying the November calls and selling some calls as well on a higher strike before that 10th of August earnings report. Hope you enjoyed the video. See you soon.